Welcome to the 2013 Employee Benefits Series. For those of you who are just joining us today, my name is Gretchen Osborne and I'm an Employee Benefits Manager at Sikich. Today we're going to talk about the top-heavy test. A top-heavy plan is one where the aggregate of all accounts of key employees exceeds 60% of the aggregate of all accounts of all employees as of the last day of the preceding plan year. A plan that is top-heavy must provide an employer contribution of at least 3% of 415 compensation to non-key employees. A key employee is any employee or former employee who during the 12-month period ending on the determination date was a more than 5% owner, a more than 1% owner with compensation in excess of $150,000, or an officer with annual compensation in excess of a specified dollar threshold. The dollar threshold for 2012 and 2013 is $165,000. So what is the determination date? Well, I put together a little chart here for you to illustrate the determination date and the threshold for officer compensation. Remember, we're looking at the account balances on the determination date, which is the last day of the preceding plan year, or in the case of the first year of a plan, the last day of the first plan year. For example, for an existing plan, a test to determine if a plan is top-heavy for 2012 will be valued as of December 31st, 2011. For a new plan established in 2012, a test to determine if the plan is top-heavy for that initial year will be valued as of December 31, 2012. So now let's talk about how to determine an employee's account balance. To determine an employee's account balance, the plan takes the employee's account balance on the determination date and adds back to the account all distributions that have been made during the 1-year period ending on the determination date, plus any in-service distributions that have been made during the 5-year period ending on the determination date. In-service distributions are those made for reasons other than death, disability, or severance from employment. An individual's account is not to be counted if the individual has not performed services in the 1-year period ending on the determination date. So now let's go over the top-heavy steps. Steps 1 and 2. Who is the employer? Well, the top-heavy determination has to be made taking into account all plans maintained by the plan sponsor, plus any other company that is a member of a controlled group or an affiliated service group organization that includes the plan sponsor. Step 3, we need to know what the determination date is for the plan year. So it's important to pay attention to whether it's an existing plan or an initial plan year. Step 4, we need to know which employees are or formerly were key employees. So it's important to be able to identify the key employees, the former key employees, and the non-key employees. Step 6, we determine the account balances for all includable employees. Remember, an employee's account is not counted if he or she has not performed services in the 1-year period ending on the determination date. And then step 6, we can determine the top-heavy ratio once we know all the rest of the information. If the top-heavy ratio exceeds 60%, the plan is top-heavy. So here we have a sample top-heavy test. And as you can see, to determine the employee's account balance, in this case, the plan takes the account balance on the determination date and adds to the account balance all distributions that have been made during the 1-year period ending on the determination date, plus any in-service distributions that have been made during the 5-year period ending on the determination date. And in this case, we have where we're adding back the current year distributions. On the next screen here, we don't include account balances and distributions for inactive employees who have not rendered service within 1 year. So within the 1-year period ending on the determination date. So you can see there's three employees who are in that case where they're inactive employees and they have not rendered service. So we're not going to include their account balances. Then we determine the top-heavy ratio, and if the ratio exceeds 60%, the plan is top-heavy. So in this case, we've taken the balances of all the key employees, that's those that 715,765.78, and we've divided it by the balances of all includable employees, which is 1,290,486.12, and that does take into account distributions. And the top heavy ratio of 55.46 is less than or equal to 60%, so the plan is not top heavy. So how can a plan avoid top heavy? Well, generally, a safe harbor plan isn't subject to the top heavy rules. So a safe harbor plan is not top heavy in any plan year in which the contributions are limited to elective deferrals and safe harbor contributions. And that concludes our webinar for today. Thanks so much for joining us. Be sure to join us for our webinar on the new 401k disclosure rules in effect, What You Need to Know, on May 30th from 12 to 12:30 Central Time.